Hey guys, it's Rahim. Welcome back to my channel. If you're new here, smash the subscribe button because I talk about property investment, personal development and how to gain financial freedom. In today's video, I'm going to talk about how to master the formula of property investment, how you can use property as a vehicle, not just to make passive recurring income, to build wealth, generational wealth that would outlive you for when you're gone. But before we get to that, I'd like to thank everybody for subscribing to my channel. My channel is growing. I really appreciate you all. I really thank you for doing what you've been doing. I cannot thank you enough. So my promise to you is to bring valuable content, actionable contents to you. And for those who have not smashed that subscribe button, I really ask you to please hit that subscribe button now so that you get notification from when I push videos like this out there. So if you haven't done it, smash the subscribe button now. Fantastic. Thank you. That's my promise to you. I will promise to give you the most actionable and valuable content to take your finances to the next level. So you see, the formula of a property investor is very crucial to their success. You know, the way you succeed in properties or any work of life is knowing what sort of risk you need to be taking, embracing risk with knowledge, right? To earn greater return on investment, you need to understand what sort of risk involved with that return. Top earners understand that property investment involves risk. You can buy a property today, you want to renovate it, you realize there's something else that you need to do in the property that you're not aware of. So these are the sort of risks you take, but it's a calculated risk. They mitigate this sort of risk by thoroughly doing research, knowing the market, looking at the trends and the property or the opportunities that property could lend itself to. Suppose they buy in a C3 property, which is a family property, there may be a potential to change that property to C4, to a HMO property, or to flat, or to whatever that may be. Literally, they look at that sort of way of thinking in order to make a well-informed decision rather than relying on speculation like the government is doing a train station there. The government have their green plan going in that city now. They look at the analysis, they analyze it, they look at the trend and the market, they make their decision on that basis. And also very good at looking at long-term perspective. You see, when you're buying a property, you're not buying it just for today, tomorrow, or next month. You're buying it hopefully to outlive you. You live it for your loved ones that could benefit from it as well. So successful investors focuses on long-term growth, sustainability rather than quick gain or quick cash. They are patient and allow their investment to mature and gain value over time. And understanding property market can fluctuate, but the way property market fluctuates, it doesn't fluctuate like any other stock or shares or crypto. It fluctuates in a steady pace, so it gives you advantage to re-strategize, to reanalyze, to ensure that you get the benefit, overall benefit of your investment. See, thinking long term, you could buy a property now, buy it as a 3-bedroom house, and then maybe in the long term you can turn around and say, look, what, I want to change this property to a HMO property because what, it's got 2 reception rooms. So you can go then change the 2 reception room into 2-bedroom. That then becomes 5 lettable rooms. Then you extend the back of the properties, you have that as a kitchen diner. So these are the long-term perspective or opportunities you need to be looking at properties that you are buying. Okay, because once you've got that perspective, you're not just being able to become a solid property investor, but it allows you, write this down, to recycle your money in that deal. It allows you to recycle all your money out so you can go again and buy more houses. What do I mean by that? Suppose you buy a property which is, say, 3-bedroom house, 2 reception room, and you know it's got a massive garden. As an investor, what you do, because you're thinking long term, what I'm going to do, and I'm not going to rush and do this property quickly and rent it as 3-bedroom house. No. So what you can do, you can then go and apply for planning permission to change that property from a C3 to a C4 as a family to a HMO property. So what you then do, convert the 3 rooms upstairs, leave them as rooms, downstairs 2 reception rooms, convert those into bedrooms. Then that gives you 5 lettable rooms, and then hopefully then it's a massive garden. You go for an extension, maybe add another bedroom. That then gives you 6 bedroom and then a kitchen diner, and add in all the facilities that you have there. You see, that also is long-term perspective you're doing there. Because what you don't want is to rush it, renovate it quickly so you can make a quick cash, you can then move on to the next one. No, look at the prospect of that property. Is this property going to give you better return? Because if you change it into a HMO, you'll be making from £300 to maybe £1,000 or £1,200 a single month. You're talking about tripling your return on your investment. But that only happens if you've got the property investor mindset. You know the formula of gaining leverage and massive return on your investment. And what they're very good at is what I've just talked about. Leverage, right? It's a tool, not a crutch. Okay, they utilize it very, very, very well. They use leverage wisely, recognizing it is a powerful tool to amplify their investment capacity, while also being cautious and leverage. You can leverage on people, i.e. getting builders to do the renovation works for you. Hopefully you've been watching my video, we will be doing your renovations, right? And secondly, you can use the bank to help you leverage massively. You can use people and investors to invest with you, partners. There's a massive way you can leverage in properties, as well as having comfortable life as well. And finally, diversification for stability. You see, when you're just starting, I don't advise you to diversify, because you know why? There's nothing to diversify there. But once you start having few properties, maybe you want to diversify within the asset class. What do I mean by that? Maybe if you're doing family properties, you're buying and renting properties to family, perhaps. You want to start doing service accommodation, what we call Airbnb, where you can then buy the property, fix it, instead of renting it room by room basis, you then use it as an Airbnb, as a mini boutique type sort of hotels where families, event goers, contractor will be staying in a short-term basis. You get paid on a nightly basis, and if you're doing those sort of strategy, you're looking at £1,000 to £2,500 minimum a month. So these sort of diversification really improve your cash flow, and I call this sort of strategy a cash machine. Perhaps you want to convert the property into flats, having multiple stream of income in one building. That could be another way you can diversify your investment portfolio. And top earners minimize the risk and capitalize in different opportunities within the same asset class. Have you thought about changing your 3-bedroom house from a family let to a serviced accommodation, Airbnb property? If you haven't, maybe it's about time to think about that, because it gives you serious return on investment while it reduces the risk of repair and maintenance and all these damages that tenant causes in your houses. Last but not the least, the most important out of all of this, property investors. We love educating ourselves. We love learning. We love adapting. Most successful investors commit to lifelong learning. They stay updated with the legal market shift, looking at the relevant business news, looking at new strategies. They adapt their approach based on evolving market dynamic, always looking for ways to prioritize and optimize their property investment performance. So if you're one of those, continue learning. Continue learning. Don't give up. Don't think you're too old or too big or too educated to educate yourself. Go out there, pretend to be a sponge, suck the knowledge, suck the information. Believe me or not, it would only make you successful. Before you know it, you've become a millionaire, not knowing you're subconsciously learning and diversifying and continuously developing and improving yourself. So if this video has been helpful, smash the like button below, subscribe to my channel for more amazing videos.